just like tax structuring. Obviously, you're a business owner. We're talking about investing, you know, being tax effective. What's I suppose what did you learn from the work that we did in the tax space in particular?
I learned so much. There's so much that I didn't know before. I probably can't explain it, but I know we borrow money here and return it there and pay interest there, and somehow it's all tax deductible. And you just told me where to move the money, and it was easy.
And I think that and sometimes it's funny that we see, and I see this a lot with business owners, that they, you know, you build a strong relationship with your accountant. And I know that you had a relationship with your accountant for how many years were you working with them?
12 years or something.
So you build this relationship because the people are involved in your business. They see the things, you're talking to them about stuff. But we find that a lot of times when we work with business owners, we uncover opportunities for structuring things in a more effective way. Maybe it's an asset protection plan. Maybe there's some tax efficiencies that we can drive around their investing, maybe using different, you know, trusts and these sorts of things. But then, and obviously we want to work closely with our clients, you know, partners in accounting space, mortgage brokers or whatever, as much as we can. But oftentimes with the accounting side, it is a bit of a blurry line that people don't know where that comes from and who should be there and who should be proactive. I find that sometimes accountants can fall into the habit of just doing the same thing over and over again and then not getting opportunities. And then we talk to a client and we say, hey, what about this, this, and this? And they go to the accountant and say, oh yeah, I can do that. So what would your advice be? Like, what would you say for somebody what would you say, where would you say that line is, and how, like, what's the difference between the advice that you get when there are ultimately both around tax?
Yeah, I think accountants are naturally very safe. All they want to do is protect your cash and make sure you're paying your tax bills and don't get sued by the tax department. And they don't necessarily give you the best growth advice. Because they're conservative and they're probably not really qualified to give financial advice. Things they may know, they wouldn't encourage their clients to take, not even a risk, but even doing anything that's outside the box.
Yeah, and I think you've got obviously you pay your tax, you've got to do the right thing, and you know, you can't do schemes to avoid tax. That's the definition of tax avoidance. But often that there are ways that you can, you know, structure things in a different way with maybe things outside of your business, or there are business restructuring, you know, which you can do for asset protection purposes, which also has some other benefits, or when you invest and, you're making sure that at least that part of your situation is tax effective. Because I think for a lot of, I was actually just writing a piece on this just earlier today, that sometimes for non-business owners that the ways that you can reduce tax are sort of limited. But one of the big ways that has a massive difference on the outcomes that you receive, and this works for business owners and non-business owners, is making sure that you're investing in a tax smart way, that you've got tax effective investments, that they're structured in a tax effective way before you go down that path. And then you're choosing the most efficient way possible and making sure you're getting the best return after you pay your tax bill. But tell me what's just going back to some of the stuff that we did together, was there anything else that you thought was I suppose particularly useful or impactful when it came to, I suppose, moving you closer to where you want to be financially?
Yeah, well, there's quite a few things. So one of them was using a broker to buy our investment property. But that was very well spent, because we didn't have to invest emotionally. We didn't have to go out every Saturday and look at open houses. And someone else did all that for us. And she understood the market, and she saved us money in the end. Even after paying her professional fees, we end up paying less for the property than we would have paid for ourselves, plus the amount of time we would have had to spend on it and all the sleepless nights wondering if we made the right decision or not. So broker definitely helps. And that's what I was going to say before as well. It's like just going to the professional. That's why they're called financial advisors and accountants. It's two different people. You have to go to the right people for the right advice. Like going to a real estate broker, they are in the biz, they understand that you have to go to a professional to get the best outcome instead of trying to make it up yourself or ask the wrong person for advice on a completely different area.
Yes, and I think that particularly for someone in this sort of situation that you guys were in, where you had a less than ideal experience in the past, that sometimes often then having the right people in your corner at the right times is going to give you the confidence to actually pull the trigger. Whereas if you're on your own, then you can have that fear, and then you start getting the self-talk, and then you get stressed out and worried, and then life gets in the way, and then you don't take action. But ultimately, then you're missing the opportunities to actually be getting ahead and building that financial momentum.